Hey guys, Rob Keynes from 𝙂𝙊𝙇𝙑𝙀𝙍.com. It's November 2nd, 2021, and we have our very new roundtable put together with Dave Kranzler. You guys know from Investment Research Dynamics, and we're adding, I guess it's been on the program before, first time to a roundtable. It's Glenn Jessome of Silver Tiger Metals. Gentlemen, how are you guys doing today?
Doing okay.
Fantastic in Halifax.
Yeah, good weather up there, Glenn?
You know, it's we've had a great fall. But you know, I think tomorrow we're Celsius, of course, in Canada here, but we get down to freezing here in the next couple of days. So beautiful, clear, but the winter is coming and the snow is coming.
Yeah, winter is coming.
You get some aurora borealis action up there.
You know, we usually don't, Dave, but you noticed, I mean, you've been reading it. We've had this real phenomenon where it's almost all the provinces are seeing it lately. We're not quite far enough north, but over the last week or so, we're all seeing it. So it's a little bit of a treat for everybody, but I've seen them many times. They're beautiful, beautiful.
I think they said winter is coming a lot on Game of Thrones, and I think it's apropos given what we were talking about prior to the recording, which is all the goofy stuff going on in the financial sector. So let's talk about that. Dave, I think you were mentioning that something about after the last crash, 90% of traders, retail traders, got stopped out or margin called or whatever it was. What was that statistic you were mentioning?
It was a study that was done, and it was something like 95% of all retail day traders wiped out their accounts.
Because they're all on margin, and
well,
you were noting
they load
that,
up on margin, and they're chasing these worthless stocks higher, the way these meme stocks are getting chased higher. And when the market, I mean, first of all, liquidity in the overall stock market is drying up as it is, but when the market starts to head south, it falls a lot more quickly than it heads up because liquidity dries up. And if you get a margin call, you just got to sell. You know, you can't play around with the bids, you know, and hope for a bounce in the market. You just got to dump. So, and that's what happens.
And that's that vicious cycle that starts.
Yes. The irreversible debt spiral.
That's it.
So Glenn, you were talking about your background and, you know, MBA, have studied the markets for a long time. Of course, you have some background in finance working in the mining sector. What does it look like to you in this market? Are we, you know, have we gone past the, you know, the Rubicon here? Do you think it's going to reverse?
You know, we're, first of all, my training securities lawyer, building public companies. We'll talk about that in a minute. But the MBA side, everything I see in the markets and have seen for quite some time, you know, it's defying logic. But from our perspective, we're focused here on the precious metals and that pricing. You know our background, and some of your listeners do. I'm very fortunate to have built the last two public companies for our group Gold and Silver Tiger, $1 billion market cap, couple of $100 million. We do one thing: we mine silver, and we've been doing it for 25, almost 30 years in Mexico, building big mines, 3 big ones, sold 2 to majors. We mine it when the price is up. We mine it when the price is down. This is what we do. But you asked me about the market and what I think, and what I think is we've sought $2. We saw $250 gold. We mined it. $10 silver. What we see ahead of us, from someone who's lived this, pulling that metal out of the ground for a long time, is the best 10 years that we think are coming. Forget all of the things we're going to talk about on the financial. Dave's way smarter than me on that stuff. I know that. But what we know is supply and demand. There's just not enough silver out there, guys. We know where it is. All kinds of reasons we're going to talk about. CapEx, how long it's going to take to get to. There's not enough for our, I don't know if it's the right word, woke world. They want battery cars, they're going to get them. They want 5G, they're going to get it. They want solar, they're going to get it. Oil is gone. Copper is the new oil. So from our perspective, there's not enough. It's got to go up. I got some other technical things I'll talk about, but maybe I'll leave it at that for now. That's 50,000 feet. That's the reality.
Yeah, Dave, we came off 3 days at Silverfest with Chris and Yara, and one of the things that we talked about was what's going on in silver. We have not enough silver to meet demand, but the price isn't going where we think it is. And one of the segments we had was basically, is it the Comex, you know, the derivative market setting that price? What has to break there for that derivative market to really reflect the actual fiscal supply demand that we're starting to see in 2021?
Well, you can have it happen 2 ways. You can have the regulators do their job, enforce the regulations that are on the books, but that'll never happen.
Yeah.
I think it's gone on longer than I expected that it would, but
Right.
For now, when these banks go short derivatives and they have obligations to make deliveries. Okay, so when there's a delivery made on the Comex, it's not like the buyer who's taking delivery. It's not like, most of the time that bar doesn't leave the Comex. He keeps it at the Comex. They incentivize you to keep your bars at the Comex with cheaper storage rates than you'll find at a non-Comex private depository. And, who knows if all that silver is really there or not. But when you have, well, first of all, you have industrial users and jewelry manufacturers that have to have bars delivered, but well, the industrial is a decent component of demand, but, jewelry, India and China are, they're importing a lot of silver, and those bars obviously have to be delivered because they got huge solar programs. The population likes jewelry. That's how they accumulate their gold and silver holdings. Mostly, a lot of it's in jewelry form. So at this point, there's still enough, supply of silver to meet the demand that requires delivery. I think at some point, that's gonna run out, and really all it would take is another quote unquote gold rush to happen, and I think we will see that. We started to see it in 2011, and we saw what happened to the prices, and it started to happen in March and April of 2020, and the LBMA and the Comex managed to tap dance their way out of that for now. But we talked about all the signs that we would probably see when it's getting closer to the point at which the delivery obligations of these banks that are creating paper shorts run out of, or start to run out of, metal that has to be delivered to the end users.
Yeah, I think what we know in silver, there's not enough of it. Looking the next 5 to 10 years. I talked to 𝙁𝙊𝙇𝙇𝙊𝙒 at an Orange Investment Conference, and Crescat Capital does this wonderful research. They have this chart in their research called the gold cliff. And about 2027 to 2030, we start to run into that cliff of proven and probable reserves around the world where we don't have the new finds to replace that. So we know gold is going to get scarce, but with gold, to some extent, most of it ever mined is still above ground. Now, it may be under obligation to central banks or in certain commercial contracts, but it's there to be had. The problem in silver is we don't have a supply cliff coming up in silver. The supply cliff is now.
Yeah.
The Silver Institute and Metals Focus, which does their research, said that we're going to demand over 1 billion ounces in 2021. I haven't seen anything to contradict that, and I keep quoting this report. 1 billion ounces of silver in a year for the first time in human history. Where's that silver going to come from? I don't know. I think we're going to hit severe, in my opinion, severe and protracted supply deficits year over year, with maybe an exception here or there in silver. And it's going to be very difficult, talking about from a supply chain perspective, to replenish that when we're not getting the money into exploring bigger projects, or what we're finding are less and less primary silver miners. So all of that said, what I did recently is take delivery of a Comex bar. So we bought a 1,000-ounce silver bar for the business. I did a video on that earlier this week, thanks to Ian at Arc Silver and the 𝙃𝙀𝙍 Depository. So we've secured our silver as a business. And I think what's going to happen, but that's as an investor. If you're looking at Samsung, if you're looking at Apple, if you're looking at the military, if you're looking at the medical field, they're going to start doing the same thing. So to your point, Dave, they're going to start pulling those big bars, right? And either they're going to go through the Comex or they're going to go straight to the mines who are pouring it. My bar came from Korean zinc company as a byproduct. They're going to go wherever they can to get that silver. So question for you, Glenn, if that's starting to occur, what happens to companies like Silver Tiger who've got it in the ground? You guys are the supply the next few years. What happens to those primary silver miners like yourself?
So you said something, I'll get to that, but you said something. The cliff is here for silver. It's here.
Yes.
Let's learn from our old dirty friend oil. Okay. Oil is gone, eh? Copper is the new oil. Well, what people don't understand, when you turn it off or turn it down, you can't turn it right back on. So
That's right.
factor into that, to the price of oil. Think of the supply squeeze issues we have. That's affecting oil as it's trying to turn on and trying to come back to fulfill this demand. Silver is right there. Do you understand, to turn silver back on with the CapEx required? Because it's a byproduct also of the base metal. That's a 10-year process. 10 years. Okay. You don't turn a switch. So learn from oil. We're going to be exactly the same. So that's my thought on that. Look, I said something. We've been mining silver for 25, almost 30 years in Mexico. Some of the biggest mines there, built 3, sold 2 majors. Back to that. We think it's going to be the best time to own a silver mine in our careers. And we're getting a little older here, David. All of us are. You can see we're just getting a little long in the tooth. But from our perspective, that's it. Why? Because there are not many silver mines left undeveloped in the world. If you look at what GoGold has, you have them on here all the time from our group. That's going to be a top 5 strategic silver asset on the planet that'll get built 100%. Tiger is going to move in that. It's already moving there. Why do you think the top institutions on the planet did our last bought deal financing in the precious metal space? They know that. And from my perspective, you just have to have the supply, which we have. And boy, is the demand coming. They're going to beat a path through our door. It's going to be very exciting. It's a great time. Exploration prices are one thing, but to have a silver mine for this next decade or 2, fantastic. Couldn't be in a better place if we'd asked for it.
So Dave, I have a follow-up question for you based on what Glenn said. Glenn, having such a great project there in Mexico, #1 silver producing district in the world, great drill results, is getting the capital, it's getting, the big banks that are interested, the funding is there. What do you see for the rest of the investment space? Because what I see is that hasn't occurred on all of the silver junior miners. Do you anticipate that there's going to be, you write a mining stock newsletter, right? Do you anticipate there's going to be a flood of money into the mining stocks at some point, because it's going to say, hey, not only, do we need the metal for industry, we need next year's metal, and next year's metal, the smart savvy money is going to start investing in the far left of the supply chain, getting it out of the ground, a few bucks an ounce or whatever the case may be.
Well, that's a good question. And actually the new issue financings across the board, gold and silver juniors, are getting funded and oversubscribed.
Okay.
So there is like, a lot of these investment funds, private equity funds, maybe dedicated precious metals sector funds, they've got cash to invest. They're just not out there. They're playing new issues. I think, the stocks themselves, we need to see gold and silver start to take off. And when that happens, and I think right now, I think if gold can get over 1,800 and stay, and silver can get over 24 and stay, I think we're going to see it shoot higher after that. But and that's where you'll get in the secondary market. That's where you get a flood of money, especially from retail, that'll come in and start, it'll start chasing the prices higher. But in terms of the primary market financings, at least every deal that I've seen and that I take a look at and that I read about, they're oversubscribed and they get upsized. So I think as Glenn mentioned, his last financing was obviously oversubscribed. The money's there, you just have to have a good project.
Yeah, and I think there's a handful of good primary miners. You've certainly got some of those in Mexico, Peru, some of those big mining districts. Do you think, Dave, that given some of the renewed interest in the mining space, finally, it seems like after years and years, they'll be able to get these projects ramped up in time to deal with silver? Or do you think we're going to have to hit a much higher price in silver in the meantime to continue to entice that money? Or do you think it doesn't matter, regardless of the financings, we're still going to have a much higher silver price?
Oh, I think we're still going to have a much higher silver price. I wasn't quite sure I understood the question. Are you asking if a lot of these mines that are, being planned, if they'll be up and running to meet the demand in time? But
Yeah, I mean,
Is
are we
that,
gonna have that supply online in time for this rush of demand, I think, for silver in industry, and I think monetary demand that's coming, are we gonna have it in time? Or at some point, will physical silver be sort of unobtainium, like Mike Maloney said, where there's not enough and there's such a deficit, people won't let it go. And there may be a period of time we're waiting at very high prices for that mine supply to come online.
yeah, I mean, you can't, I mean, trying to get a mine online is like pushing on a string, right, Glenn? I mean, it's not something that you can rush. You know, there's regulatory, I mean, there's all kinds of hurdles that it takes to get a mine up and running. So there's going to be, I mean, you've got 𝙂𝙊𝙇𝙊𝙎 is operating now. And I don't think they're at full rated capacity. I'm not even sure if they've declared commercial production yet. Silvercrest Metals hopes to have their mine ramped up in the second half of 2022. But you know, you're talking, I forget what the number is on 𝙂𝙊𝙇𝙊𝙎. Silvercrest Metals is planning to do 12 million ounces a year, but that won't be into full swing until well into 2023. They can't speed that up in order to meet demand. So if we have you know, a supply demand deficit in a big way in 2022, there's nothing that can be done about that. I guess, you know, maybe, you know, they'll you know, the refiners will try and source recycled silver. Recycled silver is a not an insignificant amount of supply every year. Right. But what's interesting, and I just thought about this as we were, you know, a little bit earlier. Do you remember, like, say back from, I don't know, 2008 to 2011 or so, there was all these cash for gold, cash for silver businesses that sprung up. Well, that most of that metal came from, you know, it was grandma's silver sitting in the attic that no one in the family wanted. You know, that's where a lot of that came from. And you don't really see those ads anymore. You don't see those businesses. I haven't seen a cash for gold advertisement in years. And I guess my point here is that the current base of investors who hold gold and silver, that those are strong hands. So it's not like, I mean, you know, at what price would you let go of that silver bar that you bought? $50 an ounce, $100 an ounce.
I'll take David Morgan's advice and let it go at $600 an ounce.
Well, there you go. And I think most of the people now, I think a large portion of the investor base that holds physical metal, they understand that. And they're not, you know, they're not going to let it go.
So can you imagine, guys, like, for why I'm smiling, okay? You know, what we have at the Tiger, we're really simple, David. And why we have in that $23 million, and we had much more on the table, straight up common shares, no warrant. That was Franklin Templeton. That was Van Eck. That was Merck. That was Sprott Asset Management. Now, I've only got a $200 million market cap, beautiful district. It's going to be the next silver district coming out of the gate in Mexico. But they, you know, for them, that's an early stage investment. But they load it up because they know what's coming. They're the smartest people, if you believe it, in the world at this. That's why people give them billions of dollars to invest on their behalf. That being tens of billions, hundreds maybe. That being said, from what we do, we're simple. Drill off ounces, move it to economics, and take it out of the ground. High grade silver. So when we look at this, the question was, what's the timing? I think where we would have sat back in a normal market and said, Tiger, we're going to drill off 300 million silver equivalent ounces at super grade, and then we're going to build it. We don't look at it like that anymore. We know that shortage is coming. We know that price is going. So as we drill off chunks of 50 million silver equivalent ounces and another 50, we are thinking, because we're miners, always how are we getting it out of the ground? Now we're thinking we need to get it out of the ground as soon as possible because of the demand. So when we look at these things, our perspective, as I keep coming back to it, we are heading for the best 10 years in our careers. Now, you can't sell drill holes. You can't sell core out of your drill hole. I really think why we are differentiating ourselves and why we have been so successful as Mexico. Every time we get a project, it ends up as a mine. That's what I think. Even the juniors, I'm not being what people need to think about investing is not for the next 6 months or the next 8 months. we have to invest in the next decade. That's where you got to go to the teams that have built mines. Look at the projects they have. They would not have a project. Our team would not have a project that we would be talking about on this screen today if we didn't think it was a mine. It's that simple. So that is the way in the long term. You said $600 an ounce. I can't even imagine what the Tiger is going to be worth if we get to $600 an ounce. It's going to be unbelievable. If we get to 50, it's going to be unbelievable. And do I think we're going that way? Absolutely. So from my perspective, the guys who are going to build mines, they're the biggest win in this, because you can't just promote a little drill hole, because at some point you got to take advantage of that price, and that price is going to be the metal. And 10 years, that's what we see.
One of the things that we were problem solving at Norton's investment conference, my team hosted a dinner event, private dinner event there. And my lecture that I gave was basically on the next generation. So some of the older guys who used to invest in the metals are now not investing as much. Some of the younger generations may not have caught on to resource stocks. I think we all know why. Mining's dirty, it's bad, those types of narratives that the younger generation doesn't realize all the improvements the miners have made, the ESG and all that kind of stuff. But in any case, we're trying to figure out what's going to be the impact when the millennials come online. They're now reaching 40 years of age. They're the primary earning capacity of their lives. And the statistics I got from Business Insider was they, in the next 10 years, are going to get $63 trillion from their parents. And they're going to be also in their prime earning power. So we're talking almost $100 trillion that they're going to be able to invest. How do we then appeal to that younger generation to say, hey, if you're looking for good investment in something that's going to be needed, silver is a good way to do it. The mining stocks are a leverage bet. So then I talked to 𝙁𝙊𝙇𝙑𝙊𝙒 of Crescat in an interview, and I said, why is gold silver not appealing to that crowd? And he said, they're going to want to go for the leverage play. They're going to want to go for the stocks. Tavi and Crescat think that the millennials will get involved in the mining stocks maybe before even the metals to a large extent. And if we really have almost 100 trillion coming online the next 10 years, that could be an opportunity for the resource sector to capture some of that capital. What are your guys' thoughts on how that could possibly affect, the resource sector going forward? Is that going to be a big tailwind for the resource sector?
Yes, yes, and yes. If you don't mind, Dave, I'm going to jump in here because I'm going to share something. I can share this. It's not confidential. I sit on the National Advisory Committee for the TSX Venture Exchange. Been there for a decade. That means my regulator and the securities commissions we deal with around that rely on my expertise for some reason to help them make all of the rules of the land. When the new CPC program, our capital pool program, was rewritten over the last 5 or 6 years and announced by the Venture Exchange last December, that was my committee that basically did all the work and helped bring that together with all of our other advisory committee members, the securities commissions, and the people at the exchange. All that being said, there's something happening. The regulators are recognizing that, especially the venture, think about this. It's a resource. They've got all kinds of things. It's a resource exchange. We need to get the young people, because I'm telling you, I talk to a lot of people on these Zoom calls. Boy, I'm not sure if they're going to be here next year, David. Like a lot of these guys are getting along in the tooth and gals. So don't think the regulators and the exchanges of business haven't recognized that. And what happened with Reddit a little bit, some of those guys getting interested, that next young generation, I believe they like to play stocks. They love playing crypto. They love buying stocks. Let's get them involved in our stocks. Now, this is what I want to get to. There's some changes coming to the regulation in Canada. It's public, it's out there. There are going to be some new exemptions offered. It's going through the process now. I'm a big proponent, a big supporter of it. In my role as on that advisory committee, I'm waving the flag. Imagine if you have accredited investors, David. You know what the test is there. You know what the test is here. I'll tell you, the guys who are accredited investors are the gals. It's my wife's a doc. She's a surgeon. She'd qualify. But man, many people don't qualify. Like the young guy, 29 years old, he's going to be 45 before he qualifies when he gets all that net worth and the big salary. Imagine we had an exemption, which I think is going to happen in Canada, where anybody, forget the net worth, can go and participate in a private placement, $10 million down, maybe $5 million down, depending on the test. And that would be free trading stock. No requirement for accredited. boy, that opens up the game to everybody. And I really think that you're going to see that very soon in Canada. Be some, that'll be a cutting edge change. Imagine how it'll affect the American investor. What's your biggest problem? A lot of these guys don't want any of this hold paper, 4-month hold. That's gone and everybody can play. I think something like that, and that's coming, is going to open up that door that we need, Rob, for those young people to go, great, I can get in, I can buy, and get out. They don't even know if you give those guys a 30-page subscription agreement, a 25-year-old, he's like, what are you talking about, man? I'm buying my stock on my phone. What's that? We're going to make it so that that's where they can go. And then not only buy and sell it, but that money can flow in. So there's a fundamental change coming here, I think, in the next 6 months. Pay attention to that.
Yeah, Glenn, that's good news, because the barriers for people getting into some of the issuances of this stock at the cheapest price, at the best per unit price that you can get to give you your upside, has always been restrictive to, it seems like, an older generation that had the capital. And it kind of, to me,
they don't even want to do it anymore. They made their money. They're not taking risks. We need the young people to take risks.
That's right. The young people need to take risk. And the problem was, when I passed my Series 6 and 73 exams years ago in the financial space here in the US, they taught us that it was to reduce risk on people that had less money. But I'm like, what you're actually doing is you're creating a 2-tier system. You're creating a system in which people that may need that return and that advantage to help them build their wealth, you're taking that away from them. And you can't assume people are stupid. In that same presentation that I did for the millennials, I said, according to Kiplinger's, they're the smartest investment class of anybody, because they look at more information. Like you said, they're on their phone, Glenn, and they can absorb more information in a couple hours on this than you may in a week trying to 100%. Look through a prospectus.
100%.
And so
nobody ever reads the prospectus anyway, but that's a whole other story.
I think that's important to open the game up a little bit, because again, these investors are savvy. They want the information. You need to give them access. We've got the tool to get them educated. Now we need the tools to allow them in and to play the game.
And I will give credit in Canada. I think you're going to see us be cutting edge. It's going to help us here. It's going to help us in that US market. Stay tuned. And I can give updates. I'm going to be part of that process here because of where I sit. So make sure regularly, what I can say, I will give everybody an update on as we go through the next 6-8 months. Okay.
Well, we'll have you back on the show, Glenn, because we know you have access to all that information.
Yeah.
So Dave, what are last thoughts wrapping up this presentation? We've been focusing on silver, the precious metals, the case for it, of course, the mining stocks. What struck you at Silverfest, or what is striking you right now that you're seeing in the precious metals that you want to communicate with our audience?
Well, first, I mean, I want to just circle back really quickly, because I don't think the next big move higher in the market is going to be driven by the retail side of the investor base. Because one thing I've noticed, like when I first jumped into this sector back in 2001, I would say if you looked at of the juniors, if you looked at the shareholder base, it was usually like, 60 to 80% retail investor base. And now, as when you look at presentations and you look at the distribution of the investor base, maybe retail's 40 or 50%. And this is just generically speaking. And I actually think that the next leg higher is going to be fueled by institutional investors that move capital out of these overvalued stocks and into this space. And I'm talking across the board, the large cap producers down to the evergreen junior explorers, and also M&A activity. I mean, just in the last couple of weeks, we saw the 𝙎𝙊𝙇𝙑 Gold takeover, and Golden Star just got taken over. The deal was announced yesterday by a Chinese mining company. And that's again, I think the Chinese are going to be driving a lot of the prices higher. I think they're going to start, to the extent that countries let them. Africa will let them. So Golden Star deal is okay. I think Canada blocked a merger from a Chinese company that was taking over one of the Canadian resource companies. So I think that's, as opposed to the retail side, I think that's what's really going to drive prices a lot higher. I mean, in terms of what I'm seeing, it's again, I look at the same charts you guys look at, and it just blows my mind at how cheap gold, silver, and the mining stocks are versus the stock market versus the money supply.
Yep.
You know, any kind of measure you can look at. And I think the opportunity now to get into this sector as an investor is as good or better than it was back in 2001.
So Dave, do we want to buy high, sell low, or do we want to buy low, sell high? Just from basic investment 101. You want to buy when stuff's cheap, right? Or buy when blood's in the streets, I think JP Morgan said.
Yeah.
You want to buy when it's cheap and sell when it's dear.
So would you wait until silver goes up to 50, 60 bucks an ounce to buy, or would you buy?
I would just, just buy a little bit at a time every month.
Yeah.
You're not gonna time the exact bottom in this sector.
Right.
And if you wait and say, oh, I'll wait and see if if the price comes down a bit, you might miss it. And then all of a sudden, you're chasing the train, chasing the subway train as it leaves the station. That's not fun. So you just buy a little bit at a time. I mean, there is so much, the way I see it is there's just so much upside in this sector, upside potential. You're not going to be $1 or $2 smart trying to get the best price for what you're buying. So just buy a little every month.
I agree with you there. I think we've had a good update on the silver market, especially guys. Glenn, thanks so much for joining the program. We appreciate having you on because we know you have that experience and you have a great option for people who want to get into it, Silver Tiger metals. I know that you also are going to have an update for your investors here pretty soon. We'll get you back on the program when that information is ready. We know it's coming here pretty soon. Stay tuned for that. Thank both of you gentlemen for jumping on. Glenn, did you have last words?
I want to talk about what Dave just said.
Okay.
Absolutely brilliant. And what we are looking for is we deal with the biggest institutions and the biggest banks on our companies in the world. They do a lot of work. They're looking for two things. They're looking for the generalists to come back. They're not here yet. Sentiment is okay, not great. Price is okay. I'll get to that in a minute. They're looking for those generalists to come back. Secondly, we know Fiore very well, friend of mine, Golden Star. Premiums. Got to have premiums on deals. Have market deals are no good. Why does an investor get excited and jump back in with his winnings when he just was flat on a deal? That was what you said on Fiore and Golden Star. Very, very, very important. We think that's something is changing a little bit. Price is great. Think of the last thing I'll say. $1,800 gold, miners should love that. $24 silver, we've mined gold at 250, silver at 6 or 7. So that's great. But think about, we think that's the new floor. That's what we think as miners. Because think about if there was a liquidity event where we are now going down. $1 trillion has gone into Bitcoin. Look at the strength of the US dollar and look at the price. It's just ready. And we're really excited about the next decade. So sorry I had to jump in there, but I just wanted to, Dave's on it right there. He's on it.
Thank you guys so much for joining the roundtable. We'll have both of you back on the program. For the viewers, we want to bring this to you because we think the silver market dynamics are really shaping up to be positive. Like I said, I put my money where my mouth is and bought a Comex bar, not playing around in this game. And we also believe there's a ton of under the surface potential in the mining stocks as well. And to get a good one in a premier district such as Peru, Mexico, those types, the US, you definitely want to take a look at those. And as Dave so aptly said, buy low, sell high, don't buy high, sell low, like a lot of Bitcoiners do, unfortunately, and lose their money. Or people in Tesla are about to find out when reality strikes the stock market. Thank you guys for joining. We'll have more from Gold Silver Pros.
Thank you so much, Rob. And it's a pleasure being on.
Thanks, Rob.
Thank you.
Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.